This is NBC 10 News.
"2016 has not been a good year for the stock market so far. We've seen some ups, but we've also seen a lot of downs. Today was yet another example. The Dow finished down 390 points. You just saw it there. At one point, it dropped as much as 537 points. So here now to make sense of this roller coaster ride we'll call it on the markets is Robert Wilson. He's a financial advisor. Robert, always good to see you. Thank you so much for joining us.
Thanks for having me, Keith.
First off, the question on everyone's minds, what's going on here?
Well, look, there's a couple of things that happened this week, but the first thing I want to say is we should not be surprised when things like this happen. Look, there's only two things that I know for sure when it comes to the stock market, and that's stocks are going to go up and they're going to go down. So just like when you play Little League Baseball and your coach told you always have to be ready for the ball to be hit to you, if we're going to be invested, we have to be mindful that the market's going to go down at some point, and we just have to have a plan in place for when that happens. The second thing is, look, when we experience weeks like we just had in the market, sometimes selling just begets more selling. You could own something that's perfectly good, and it may have sold off just because they wanted to cover losses somewhere else. And the last thing is, today is the third Friday of the month, which tends to be a little bit more volatile as complex contracts like options and futures expire. Not to mention, we're heading into a 3-day weekend. A lot of investors don't like to be long over the weekend, so there were a lot of things that conflated to what you saw today.
All right, so we should expect some ups, we should expect some downs, but what about the market should give us some concern here?
Yeah, you know, all is not quiet on the Western Front. There are three pretty major themes that we should be concerned about right now. The first one being oil prices. I know we all enjoy low prices at the pump, but low oil prices have wide-ranging effects. And so you have to really think about how that's going to be permeated throughout the entire market. The second thing is China. There are investors who are worried about the growth slowing in China. China is the second largest economy in the world, the second largest importer of goods and services. So think about it like this. If your second largest customer was going to stop spending money with you, that could make you pretty uncomfortable. And the last thing is interest rates. The Fed has started to raise interest rates, and even though they raised just a little bit, the prospect of future rate increases in the future have started to spook investors a little bit.
So speaking of spooking, Robert, what do we do here? Do we still wait this thing out? We plot our course? How long until we start panicking?
So, first of all, panic has never been a good investment strategy. The best advice that I could give you is to be disciplined, not emotional. The only thing that can protect you in a period of uncertainty is your discipline. So take a look at what you own and pick a price that if it goes below that, you would be uncomfortable. If it hits that point, sell it. You can always buy it back, but it's difficult to recover if you let something go down 40, 50, or 60%. But just so we're not so negative, there are some bargains out there. So think about it as a sale at Macy's and look at some good companies that you could pick up at a cheap price.
I like looking at it that way. Financial advisor Robert Wilson, thank you so much for your time. We always appreciate it.
Thank you.